Okay, guys, back again with me in Data Cannot Lie. Okay, today we're not going to read any financial statements. We're gonna talk casually about investment, especially today. That thing I want gonna discuss is stock versus gold. It can be said, gold versus gold, which is better actually. Mm, okay, the introduction. Uh, we don't care what's our job today, whether we're a teacher, or maybe we're a trader, or maybe whatever, when we're scavengers, taxi driver, or maybe we own a lot of shops, or maybe we have manager, and we have a very high salary, or whatever you have to your job is, or maybe you're an actor, whatever your job today is. But we still need. I just want to say, it's all of it is active income. Okay. Um. So that we have to change our mindset. Okay. But we have to have money management. Actually, it's such a shame that it wasn't taught at school. Yeah. I also realized it when I was in my 30s, sadly, about money management, and it should be taught when we were kids. We get income, or whatever income that we get, we have actually save some percent of it for investment. Yeah, some percent for the saving, and for our professional or whatever. And it means we have to start to throw the things that actually wasting money, guys, for a future. It will be better that money is for investment. Just like I have discussed before, whatever our job it is now, maybe we're a trader, taxi driver, or maybe we are official worker or whatever. All of it, active job, active income. Actually, it means you just only get money if you work. Okay, but when you don't work, you don't get money. That's it. Okay, that's it. It means active income. Okay, whether you are having a lot of money today, having lots of incomes, all of it is still active income. Okay, but maybe one day you are sick, grave sick, I think, or maybe you have a toxic work environment, or maybe you get fired, or maybe you resign, or maybe whatever, which make you finally you cannot work anymore. Active income will be suddenly cut off, and at the time you don't have any income. Okay, that's that is called as the real hell for us. Okay, that's why so that is why we don't care we have active income today. When our active income is cut off, it's almost the end of all for us. Okay, that's why Warren Buffett long ago, if you don't find a way to get the money while you're asleep, then you're gonna die till you die. Okay, if you don't find how to get money while you're asleep, then you're gonna work till you die. Okay, so today I want to change our mindset. So we have to stop wasting our money. So maybe you have a high income. You will think, it's okay to wasting money. Okay, I just want to say, for example, when we go hang out, yeah, we don't realize that when we hang out, maybe we go to the cafe or bar, and when we realize it, then our expense is very high. Just that it's higher than our daily needs. So we will end up in bankruptcy in one day. So we have to change our mindset. So we have to find what is called as passive income. Okay, so yeah, investment. Okay, the problem is we often thought when we were kids the best passive income from our parent is usually gold, right? Gold, right? Okay, correct. Gold is strong against inflation. And it's correct actually. Yeah, it's proven. But we have to look at another's point of view. For example, Warren Buffett on site, gold is a silly investment. It's a stupid investment. It's quite harsh actually from Warren Buffett. Why? Why he said that? Because gold is non-productive asset which doesn't produce anything. It means when you buy a 1 gram of gold, just 10 years later, it's still 10 gram. Okay, it doesn't produce anything, so you only get the capital gain. So if you buy in 2005, you buy gold in the 15 bucks, but now 90 bucks, you gain 6 times, right? But you only get capital gain. But the gold itself doesn't produce anything, doesn't produce fruit. That's why it's called non-productive asset. Okay. But now we gonna compare. I'm gonna compare to open your mind. I'm gonna compare gold if we compare it to stocks. Yeah, I'm gonna open your mind. Stock actually is a productive asset. A productive asset. It means besides you get capital gain in stocks, the rise of the price of the stock, we also get dividends. Yeah, the dividends that is called as the productive asset. Yeah, the productivity of the stock is the dividend, and it can rise until 4% or 10%. Okay, it's very big. That's why stocks are called productive assets. Yeah, it is said by Warren Buffett. Stock can split itself. Okay, if you have one stock share today, but one day it can do some kind of stock split, so that it becomes 10, 5 or 10. That's why Warren Buffett, he said, if you invest in gold, is a silly investment for him. It will be better in stock, and I agree about that. And I will give you the data that will open your mind, and I will ask you after I've told you about this. I believe you will say it will be better for me to sell my gold and invest in stock. And I'm gonna the price of gold in 2005. Okay. Price of gold in the price of gold in 2005. I'm just gonna give you an example. Sorry. Okay, wait a minute. Sorry. In 2005. Sorry guys, it takes lots of time. Okay, sorry. I forgot. Oh, it's about, yeah, it's about 20 bucks. Okay, 20 bucks, maybe $20 at the time. Oh, okay, 400,000. Sorry, 40 bucks per gram. So this is 2010. Sorry. Oh, okay. This is 25. Oh, it's about 15 bucks, guys. 15 bucks, guys, in 2005. So okay, we get it. The price of gold in 2005. Okay. I'm gonna compare it with you. Now, the price is gold. The gold price is about 90 bucks today. Okay. I forget how the exact price, but it's around 90 bucks. Yeah. Okay. It's about 90 bucks. So it raised about 6 times. Okay, 6 times the price of gold. 17 years after 2005 until now 2022, it raises 6 times. Okay. Yeah, it can really fight against it. But I'm gonna open your mind. If you buy stocks in 2005, Yeah, you take a look. In 2005, the price of the BRI stock is 0.016 bucks. 17 years later, the price of BRI is 0.286, okay, dollars. So it raises about 18 times, guys. 18 times. Can you imagine? In gold, it for 17 years, gold just rise 6 times, but stock in 17 years it rise 18 times. So it means in 2005, if you put $10,000 in gold, so your money is just 60,000 gold. But if you put 10,000 bucks in stocks, in the BRI stocks, but your money is now 180 bucks. It doesn't include dividends yet, okay? So it's about 4% or 5% per year for the dividends. So your money growing very. Have your mind been open yet? How high the gap between stock and gold? So that's why the Warren Buffett said investment in gold is a silly investment, because he has reason. Now I have shown you the fact in front of you. Yes, how great is the stock? It's the best instrument. It's better than crypto. It's better than gold. It's better than property. That's why today, if you have watched this video, it will open your mind. I think it should open your mind, and you are aware. We have to start to invest our money in stocks. It's better than gold. After I'm known about this fact, I sold my gold and I bought stocks after that. Yeah, I think I just want to open this mind for our better future, okay? Yeah, we have to save our money in stocks. You will be surprised 10 or 20 years from now. You will be surprised for the sum of the money if you invest in stocks. Okay, remember, guys, all of the richest people in the world, they are rich because stocks. Yeah, just like Warren Buffett, Bill Gates, and Elon Musk. Okay, guys, just until here. I hope this video will open your mind about investment, so that it will be a blessing for you. We are gonna meet again in our next video.